So now you've done your homework, found that local credit union. Now you're thinking to yourself, holy crap, Denzel, I just found a bunch of different types of lines of credit. The banker told me to do a loan instead of a line of credit instead because that was better, because it's a lower interest rate and yada yada. And then they told me to do this instead, and oh my God, I'm back to square one. Okay, look, this video is to go over the different types of lines of credit. Okay, so let's go through them so that you know exactly what you should be looking for. Okay, so we have secured line of credit. We have a secured credit card. Secured just means that you have to put collateral up, whether it be money, a car, a home, an asset, whatever it is. Secured, remember that word, you put money up. Do we want that line of credit? Not ideal, okay? I say not ideal because every case is case by case by case. Everyone is individually important in their own situation. So we're going to do whatever we got to do to finesse and make moves so that we can get to that velocity banking stage and actually start doing it. Okay, I have a lot of viewers that are stuck because you don't have the right credit, okay, or you don't have the right tool, or you got the wrong tool, or you applied for the wrong thing and you got denied. Okay, so very important to know exactly what you're looking for, right? So do we want the secured? Not ideal. Our goal is to get unsecured. So moving along, we have unsecured line of credit, or LOC. We have unsecured CC, credit card. We have unsecured personal line of credit. We have unsecured HELOC, home equity line of credit. And I wrote it out for you, okay? Credit card, home equity, revolving line of credit. And we have another one, it's called a CELOC, okay? Stands for a checking line of credit, okay? Very, very important, okay? Just to know everything that's on the table, all your different options, okay? All have their pros and cons, their benefits, their features, and things like that. I'm gonna display an example right here, okay, on this side of the board, using a unsecured personal line of credit. Unsecured personal line of credit. These are one of the most ideal types of debt tools to acquire. The second one, this only applies to people who have homes, is the HELOC. And not just people who have homes, but people who have equity in their homes. The next ideal type of debt tool would be a credit card, okay? And credit cards have a unique role in velocity banking, okay? Credit cards can help you build credit rapidly, okay? Can help you get your credit score to where you need it to be so that we can get the personal line of credit, or so that we can get that HELOC, okay? So the order that I have for me personally, I try to shoot for the personal line of credit first, okay? Or if I have a home with equity in it, I might shoot for this, okay? Now, what would make me not go for the HELOC if I'm a homeowner and I have equity in my mortgage? Maybe I don't like the fact of having a second lien, a second position on my mortgage. Okay, you don't like the fact of having that? Cool, we've got another option. Personal line of credit, completely unsecured, no collateral needed. It's just pretty much just all based on your credit worthiness. Then the third ideal one is credit cards, okay? Credit cards. These things come in the mail like there's no tomorrow. I'm sure you can agree with me on that. They come in the emails. They come through Credit Karma. They're on the commercials all day long. Let me tell you, credit cards, they want to be your best friend. They want to be your go-to. Why? Because they don't want you borrowing from mom and dad, right? Because mom and dad doesn't charge interest, okay? They want you borrowing from them. Not only do they want you borrowing from them, but they could sometimes give you more than what mom and dad can give you, okay? Or your family members, okay? So that's why they want to get real tight with you, right? And it's cool. Look, some people do not like the fact of having any type of credit or debt in their name whatsoever. Hey, fine by me. Have yourself a wonderful day. Go do debt snowball. Let me know when you're debt free 15 years later while I'm, using the system to my advantage. That's all I'm doing. In the 21st century, that's all I'm doing is using the system to my advantage. That's it. Why? Because I want to get ahead. Another reason why? Because my family did not have the information that I have today. Okay? And I'm sure there's a lot of families that can relate to me, or a lot of people that can relate to me on that one notion right there. So, recap. Ideal number 1 right here, ideal 2 right here, ideal 3 right there. Okay? The fourth thing would be a checking line of credit. This is kind of unique. Okay? Checking lines of credit is overdraft protection, let's just say, on your checking account. So in case you overdraft, in case you go negative, you can pull from this line of credit to supplement whatever it is that you missed. Sorry about the planes, live in a private community and whatnot, right by the airport where I'm at. Got all those rich people flying into South Florida, living the life because they're doing velocity banking, right? And they're leveraging their cash flow so that they can fly planes and go on wonderful trips and travel to Florida to go on vacation, not live, but go on vacation and all that good stuff. So coming back into it, the HELOC is my fourth ideal choice, all right? And it's pretty interesting because, like I said, it's like overdraft protection. So there might be some limitations, okay? That's why I have it in fourth place, okay? And fifth place is the secured, meaning you give the bank money and then they just give you the same amount back to use. Why would you want to do that? Well, it's great for someone at my age or younger that's trying to establish or build, or if you're older and messed up your credit, rebuild credit. All right, you want to get into the game. You had enough of every other method that didn't work for you, and now you're coming to this to check it out to see if this can work for you. Now that we have the different types of lines that we can potentially work with, the next question that will come up in your mind is, Denzel, which one should I get for me? Again, the way I answer that question, okay, there's 4 major numbers you need to know: your income, your expenses, your debt, and your cash flow. Okay? The next thing you need to know that we went over in the first video before on what is a line of credit is your credit score and your credit worthiness. Okay? So when you're talking to the credit union, you're talking to the banker, don't be shy. Ask them, hey, if my credit score is here, because you did your homework, you know where your credit's at. You're like, if my credit score is here, what is the likelihood of me getting approved for that specific line of credit? They should give you the answer. They'll say, hey, we look for this, we look for X. Hey, they don't want to give you the answer? Ask them, hey, is there a manager? Is there someone that can provide me with this information? Because I want to make sure that I don't get denied, okay, or that I don't apply for the wrong tool. So that's why I'm asking you about all these questions on the line of credit, first and foremost. And then the second thing, will I even get approved for this? Okay, if your credit score is like 600 or under, the chances of you getting any type of unsecured line of credit is going to be very low. Okay, typically what I've seen is banks approving these types of lines with a credit score of like maybe 650 or higher. Now, that's just the score. Remember, there's 6 other factors. Okay, you could have a great credit score. You could have an 800 credit score, right, and still get denied for one of these lines of credit. Why? Because you've got no accounts. The only reason why you have an 800 credit score is because you had 2 cars and a mortgage and you've been paying them for the last 15 years, okay? And that's why your credit score just looks amazing, okay? But you have no credit cards, you have no revolving accounts, you have no open revolving accounts, right? So that's why they might not even approve that. The other reason why they might not approve that is your debt to income ratio. You got a $500,000 property, you got a $40,000 BMW and a $60,000 Mercedes, okay, that you're making $500 payment, $700 payment, and then $2,000 plus towards the mortgage, okay? You don't seem to have a whole lot of income compared to your debt, okay? So there's a lot of factors that we want to take into account for, okay? Now the next question is, Denzel, my credit's terrible. I know I'm not going to get approved for this. What should I do in the meantime? We have to build credit. What do you think? We have to rebuild and establish credit. Okay, Denzel, can I do velocity banking? No, probably not, okay, because you don't have the tool yet. So what we have to do in substitute is establish. We can do velocity banking. We can velocitize your credit score. How do we do that? By establishing, rebuilding, getting a credit card or line of credit secured with your cash flow, money left over, money in your savings account. Do you have 10,000 in savings? Do you have 5,000 in savings? Do you have your little emergency fund of 2,000 or 1,000, whatever they say to do? Okay. And your credit's bad? All right. Instead of throwing that money at debt, right? Because here's what can really mess you up. Let's say you have savings, okay, but you have bad credit and you want to do velocity banking. And you're like, oh, well, what if I like pay off a bunch of debts with this account, with my savings? Would that boost my credit up? Not as much as you think, okay? So if you went ahead and instead use that money, leverage it, get yourself a secured personal line of credit that you can use to do anything you please with, all right? Now you're borrowing your own money, okay, to now pay off a debt. And now you have a line of credit, okay? Because a secured personal line of credit, all right, secured personal line of credit. I'm talking to people with bad credit, people who have been denied, people who don't have credit. You can go get yourself, and you have to have money, of course, you know, in savings and whatnot. But you go get this secured personal line of credit, and that thing becomes your savings account, okay? Got another rich guy coming in, all right? Don't mind him. So we got the secured personal line of credit, okay, that you just secure with your emergency fund, a couple thousand, right? Now you're thinking, does that make sense, Denzel, to borrow my own money, pay the bank an interest rate, to pay off another debt that I was already paying interest on? Oh boy, I don't know, this guy's a scam. Listen, the reason why I am doing that is to velocitize and establish your credit at a very, very fast rate. Trust me. The more you use credit, the faster it grows. If I was to say that and you do that and then you get it and then it doesn't work for you properly, you can get mad at me. Why? Because it may not have been the best tool for you, but it may have been the best tool for the other guy or the other woman, right? So we have to be cautious. Know your numbers, know your credit score, know where you stand financially so that we can get to where we need to get to, okay? My name is Denzel. Go ahead, tune in for the next video. We're gonna go over a live example, okay? We're gonna break this thing down on how we can use the line of credit once we've established it, okay? Thank you so much. Love you. God bless. Stay safe. Stay focused. Stay positive.